Good Friday morning, Market Chameleons, and everyone joining for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pargamanik. How you doing, D?
Good morning, Will. How are you?
Great. Feel a world better today. Thank God. Finally,
you
finally
sound
on
a lot better.
mend.
Yeah.
You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer. And
awesome.
Yep. With that, let me share my screen. Share there. If anyone is joining us for the first time, just a quick note, we do this show every morning to help answer questions you may have about the Market Chameleon tools, the data analytics. If you want to come on a show and ask your question live, we put out a link to Zoom. You could click on that link. It takes you over to Zoom. Once you're in Zoom, there's a little button at the bottom, raise your hand, click on that. You don't have to turn on your video camera. Once we let you in, everybody could hear you. You could ask your question, navigate us to where you're looking. If you prefer to ask a question by typing it in, use that chat box on YouTube, type it in there. Will's watching it. He'll read it back to me, and we'll read the questions back to me. And, we'll take those questions as well. What we'll do for now is, while people are just entering in, or to give more time for people to put their questions, we'll start taking a look at the pre-market report, see what's trading in the pre-market hours. If we could get some insights. If we don't get questions, I'll try to navigate to other parts of the website, or default to questions that we get through the emails or through chat that come up frequently. So we'll start out with the pre-market report, Will, and after, let me know if you have any questions pop in.
All right, perfect.
Yep. So pre-market report, these are stocks that are trading in the pre-market hours. We have a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. Down here, I see 63 stocks made our percentage gainers list, 69 on a percentage decliners. So this is kind of neutral indicator in the open, maybe slightly bearish. If you see, but if we look closer at this list, we do see that there are stocks that are small cap stocks in there. We have leveraged products that are in there, inverse ETFs, all this closed-end funds, preferreds. So pretty much anything that is traded on the major U.S. exchange, if it's trading in the pre-market hours and it meets our thresholds, it can make this list. So what we want to do is narrow down this list to a smaller group of stocks to get more focused insights. And what we'll do is filter down this list to the S&P 500 companies and see what's going on there. And really quickly, just one thing that does stand out before I do that is this bank over here, SIVB, down another 62%. So this was down significantly. What did you say? What it was like?
I think it was a high 500, low $600 stock in the last 52 weeks.
Yeah. No,
I mean, it was $300, I think, 10 days ago or something. So.
Yeah. So falling significantly there. Something to watch. I don't think right now it's not a situation where people think there's a contagion to or linked to other banks right now, but it is something to watch, where I think what's going on there is a run on the bank. People are withdrawing money at a fast rate, getting nervous, and that forces the bank to sell assets, right, to raise money to pay them back. And in this situation, from what I understand, is that they had quality assets. I mean, nobody knows for sure all of the details, but I think they had quality assets, but they were assets that when they were purchased were at lower interest rates, and now that the interest rates are going up, these assets are getting marked down. Basically, paper losses on these assets, making people nervous. So if you lock in a low interest rates rise, those assets get repriced to reflect higher interest rates, and that's one of the issues I think that this bank was having. And now you got significant withdrawals in there, hurting that. Obviously, if everybody wants to withdraw, and
and it's the biggest bank, I guess, in Silicon Valley, and has relationships with all the important players in Silicon Valley. So you can imagine your deposits are guaranteed up to 250,000, right?
All right.
So
so
the bank fails, you can't get, you have a couple billion,
even
10 billion.
And even if it's guaranteed, do you
It's not guaranteed, right?
I mean, the deposits, if they're insured, do you want to still withdraw your deposits now?
But the whole, I'm saying is, it's the whole deposit isn't insured, right?
Right. It's up to 200,000.
Yeah, for people out there who've made lots of money and have it in a bank.
And I think then is the question that it becomes also harder for Silicon Valley to access capital. I mean, was it significant enough that can impact the Silicon Valley access to cheaper, capital funds? Or I don't know all the details, but maybe those are questions to ask too. What about those people who depended on this bank to get, lines of credits or whatever they're doing out there to fund their operations?
It's interesting. Bill Ackman, I'm just reading one of the articles on our site. He said the failure of SVB Financial could destroy an important long-term driver of the economy, as VC-backed companies rely on SVB for loans and holding their operating cash. Pershing Square founder Bill Ackman tweeted, if private capital can't provide a solution, I mean, he's already calling for a government bailout. And he's saying that this, he goes back to the Bear Stearns, allowing Bear Stearns to fail, so Bill Ackman, is looking at this and saying,
bail them out.
Yeah, well, it could lead to something worse, right? And you don't know,
It could start small, spread, right? I mean, right now it doesn't feel like things are spreading, and you would think that, look, businesses can't be all bailed out, right? You can't always just pick winners and losers. So bailing out every time a bank fails or has an issue is going to be also bigger problems down the road. But that one stood out. That's a significant story developing there. I think it's just worth paying attention to what's going on. And I think that the contagion might be that there's fear of depositors in similar type banks or situations, right? So if you start getting runs on banks other places, that would be worrisome. Let me filter this list out. Like I said, let's do S&P 500 companies, and to do that, we use the filters above here, and this one in ETF. I'm going to click on it. We'll get a list of different ETFs to choose from, and you got in this list sector ETFs and broad-based ETFs. Up top, this SPY, that's S&P 500 ETF, broad-based, and let's click on that, and you'll see the data tables below. They got refiltered by stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. And here we do see 11 stocks made our percentage gainers list, 16 on the decliners. So from this perspective, slightly bearish bias at the open. And here's the bank, and I think a lot of these are banks, right? Sign, SB, Oracle just reported earnings. Some banks up here at the top, maybe in sympathy with that SIVB coming in. So let me see. I don't have much to add to the pre-market, unless, do you have any questions?
If we wanted to go back and see the order flow after the past couple of days in that bank, is there a way to do it?
In SIVB?
Yeah.
Yeah, let's
Option
take a
order
look
flow.
at it. So let's see. So I guess right now was trading halted. I don't know if this was older or not, but
was halted a couple times yesterday, I think.
I think every time it hits a volatility, a volatility breaker or something, it gets halted for a little bit. Let's take a look. Let's take a look at that, where if anything was going on. Well, first, I'm just going to take a look at the history here of, so so yesterday closed at 106 over here. But leading up to it, here are just looking at the option volumes here. These are the open interest, how they changed. But leading up to it, doesn't look like, from option volume standpoint, maybe here when it was down 5.5%, it ticked up a little bit, but you wouldn't think that that's really, really significant uptick in options volume. So from that perspective, just looking at total volume, in the options, it wasn't like, wow, like something was like blaring signaling. There was an uptick, but not like a, didn't go all, to 50,000 all of a sudden from zero. Yesterday was really the big uptick in volume, which was already, in the midst of the crisis. So from that, just from that perspective alone, I wouldn't put too much weight on, if the options were, all of a sudden signaling something to come, right? Like you could see the open interest kind of stable here, ticked up a little bit here, and it was pretty much stable yesterday. The volume in the stock, so you could see the volume in the stock was stable, and it only really took, it took that event to get people alerted to it. All right, so that's just letting you know that's from that perspective. But let's just take a look at what the options were doing yesterday, the order segment. So from the perspective of order flow, there's more bearish than bullish order flow. And you can see here about 665,000 bullish deltas versus almost 1.1 bearish deltas. As a weighting of how much could that have been impacting the stock itself, right? We could compare this delta pressure compared to what the volume was in the stock. And you could see that, maybe as much as 5.5%, 6% of the volume coming from the options could have impacted the stock, approximately, right? We don't know. Then after the trades, there's like gamma positions in Vega, but like that's the estimate. So the options weren't a significant part of what's going on here. These were people selling shares. I mean, people were getting out, right? They're basically letting go of their holdings. And this is how it kind of progressed throughout the day. So as the day progressed, more and more people were, getting shorter. The way they were doing it, let's take a look at how this delta, more put buying, right? Because all puts for negative 654,000 deltas, selling calls 429,000 deltas. So you could see buying calls 338,000, selling puts only 309,000. So as far as deltas go, 2 times the bearish deltas, buying puts versus selling puts, bearish deltas, were outpacing 2 to 1, selling calls outpacing buying calls. And the largest delta, bearish delta came, the largest delta was bearish. These are the deltas by option. So this is where the largest single delta came from, the March 125 put. So, so as it was going down, the March 125 put, that's the largest single delta. You could see selling calls 200 called there, buying the 105 put, 140 put, and so forth. Let's just move down to here. And you could see here, this is the history of the order flow sentiment. This is where it hit, which was yesterday. So I think it came probably as a surprise to everybody. It was very fast and sudden. That's what the data showed. It was very fast and sudden. No like warning bells going off ahead of it. And you could see here, look, and
you can actually go back in time and even look at this report, right? This is, I see.
Yeah, you could keep looking at, you could go back, look at the report, March 8th, March 7th. I mean, you can see they're small, like the options market itself is a small, it's not the same thing.
Yeah, this stock was barely traded, really.
It's the options market is not a significant part of the overall volume in the stock, right? So the volume in the stock is coming, not a lot of it from options, whatever it's trading. You've got different types of traders going on. You got pension funds, retirement accounts, mutual funds trading, technical analysts, fundamental traders. They're responsible for most of the volume, since the options are not a big part of the volume. In day to day, they're not a big part of the volume in this stock. Let me see if we could actually, I just want to see what the open interest would look like. So we did open interest by strike. And you can see here the 250.
Hey, Dave.
Yeah.
I think when I coughed, I may have affected the reverb in your mic. You want to turn it off and then turn it back on?
Is that better? Better? Okay. And we could see here this is the open interest. But I'm looking at it, just hovering over it, 1,800 contracts on the 250 line, but not a lot of contracts out here. 1,200 on the 140. So not a lot of open interest relative to like the stock volume. So yeah, just looking back at it, there's nothing, that was, happening in the options markets ahead of this, big change in the story in the stock. Any other questions regarding it?
No, that was great, D. Thanks.
Okay. I'm just curious to see how far, drops so far. I don't know if they're adding strikes today. You could see that this was such a significant drop that it was like the low strike that I'm seeing yesterday on the board was 125. Let me just see coming out here, 140. So that's how bad this was, that, it blew through all the lowest strikes on the board, and trading well below that. So at this point, wherever it's trading, there are no even options available around these price points. These are all, let me just take a look here. 105. So on the board, the lowest strike was 105. And so you don't even have, at this point, unless they add options won't even be that relevant anymore, because you don't even have strikes yet listed around these prices. It wasn't even, that's how unexpected that came.
Yeah, and both Rob and Michael McRae said that the stock has been halted. I don't know.
So it is. So it's at this point, it's halted. I don't know this is such a big
Where
drop.
do you see that? Oh, there it is. All right, right under the.
Yeah. So it's such a big drop at this. They want to just prevent panic. I don't know. Halt it for whatever day. I don't know. And they might have pending news. I don't know why it was halted. Could be just because of the significant drop, but they might have pending news on top of that. So let me see. We don't have too much time left. If there are no questions today, Will, and it's Friday, I might just let people go. It seems like.
Any big plans this weekend?
Today, I'm taking, while we're waiting for questions to come in today, I'm taking my daughter out because she like competes in debates.
Oh, that's cool.
And yesterday was the last debate, and she got the first 4 people get awards in the debate, and she got like a trophy. She came in number 4. So, and I don't know how many, couple hundred people that are debating around the city and state. So to celebrate, we're going out to dinner tonight.
Congratulations! That's awesome.
Kids, the wife. So that's going to be. So we're excited about that. What about you?
Well, we did get a piece of news pop in from Gary. He says Goldman Sachs has been retained by SIVB. I guess. I don't know how you raise money going into a situation.
Well, maybe Goldman Sachs is going to swallow them up and buy them.
Yeah.
Or
Well, you can imagine. The real, I guess. And again, this is not in my wheelhouse, but it sounds like from the brief Ackman article I read. A lot of Silicon Valley venture capital funds, basically money that was raised for these funds. So to pay employees, to pay rent, to pay, outside services, all the money was being held in this bank, right? Just to pay their day-to-day expenses. And now it's, at risk of disappearing.
Well, that's why they have to, if that's the case, then they have to take their money out, because they're dependent on right, their payrolls, their all their that could be devastating.
We're watching a Silicon-based bank having a run on it, basically.
And maybe Goldman will, who knows, maybe they'll just buy them and save them. And
we were looking, I think we were looking, where were we on the back? Were we on the balance sheet? The assets, it was like 211 billion, I think. And
so the thing with these banks, is that it's very hard to actually, get in there and understand the risks of banks. They're always the hardest things to analyze. Like, you don't even price them like a regular stock. They're very difficult to price because they're, it's not possible for you to read every contract, every collateralized, asset and figure out and map out their risk. because banks are they're in the business of risk, right? And to get in there, you could read their balance sheet and it could look good, but in reality, we don't know what's sitting on the banks and what kind of risks they have, and the sensitivities of their risk to other factors in the economy, right? Like the credit default swaps. When these banks, the banks, there are certain financial institutions selling these credit default swaps. Well, they contain risk that that on their balance sheet, it looked like zero risk. It looked like a riskless trade. That's how they marked it. That this was like a riskless sale of an insurance that will never blow up.
Yeah, it was probably marked as an asset.
Yeah. On the other hand, you had banks buying credit default swaps, thinking, well, I'm hedged against my risk because I'm insured. So now I'm holding a riskless asset too, right? So now you have two banks holding riskless assets, or they didn't even show up on the balance sheets, and they're on opposite sides of each other. So when the things blew up and they're like, well, these credit default swaps went from, 10 cents to $100, the bank doesn't have enough money to pay out. Well, then you have like on the other side, whoever it was, Goldman or whatever, they're like, well, we thought we were hedged because we own these credit default swaps, but the other side doesn't have the money to pay us, right? So now it starts to that's how, it starts to unravel and blow up. And at least for me, the banks, when you open it up and you start looking at it, you're like, well, you don't know what's going on. You don't know really what they're holding, how they're hedging their risk, and there's too many interrelationships impacting, the things that are on the bank's books, right? It's not like a traditional company that, you could look at it like Apple Computer, right? That's a little bit easier to figure out, okay, here they're they have assets, they have liabilities, they have free cash flow, and so you could figure that out. The banks, in insurance companies, it's a different story, because you're like, well, how do I really know what risk they have on? It's not really possible to know their actual risk that they're holding on their books.
Well, awesome. Michael McCrae says, what symbol for CDS on MC? We don't show credit default swaps.
Yeah, we don't show credit default swaps. They're really over-the-counter instruments. So they don't trade on like the listed regulated exchanges. It's really like over-the-counter interbanking, credit default swaps. So you'd have to be plugged into that system to really see it, and and it's almost like negotiated through phone calls, and so it's not like a traditional market where you're seeing a firm quote that you could buy and sell, right? But you can see if there could be hedges in the put markets. People are selling credit default swaps perhaps on banks or whatever, then you might see some of that transfer in the crash puts or whatever. But these credit default swaps, they're opaque. They're trading over the counter. We don't even know. It's not like standardized contracts either. These are like negotiated contracts with different terms in place. So here in option, when we're looking at options markets, these are standardized options, right? These all have whatever, you have an expiration date, a strike, a delivery, one contract, 100 shares, call. So they're standardized, very more simple to understand. These credit default swaps aren't like that. They're basically negotiated terms between counterparties.
All right. Awesome job, Demon. Thank you so much.
All right, everyone, stay safe out there. Have a great weekend. Have a great trading day, and hope to see you guys on Monday.
Thanks, everybody. Great job, D. And everyone sends congratulations to your daughter.